Hi, I'm Victoria Smart with the Manna Group.
And I'm Shane Bangle, and today we're going to talk about down payment assistance programs and the many benefits they offer. First-time home buyer questions that I have.
Okay.
Can I buy a house for no money out of pocket?
Yes and no.
Okay. What's the yes?
So USDA loans and VA loans are zero down.
Okay.
However, you do still typically pay your earnest money, which is 1% of the purchase price, and your home inspection fee up front, because that's paid to the home inspector. They're a neutral third party.
Okay, so VA and USDA are zero down. So what do I need down payment assistance for with those loan types?
So technically you don't, but you can pair down payment assistance programs with the USDA and the VA loans. You can help cover your closing costs with them.
If you're doing a conventional loan,
Mm-hmm.
and let's just say it requires 3% down payment,
Mm-hmm.
with the state program of down payment assistance, you get your loan, your first loan from the bank, and then 3% you're getting as a second loan from the state, correct?
It's a deferred loan, so you pay it off when you sell, refinance, or after 30 years.
Oh, so let's just say it was a $500,000 house,
Mm-hmm.
so that loan would be 15 grand.
Mm-hmm.
You're not making any payments on that?
Not making any payments. Most are either 0 or 1% deferred interest.
Nice. How many, now I hear people talk about these being grants. Are any of them forgivable?
Not through the Washington State Housing Finance Commission, which is the programs that I usually work with. I know there are some grant programs. BECU and Numerica both have grant programs, but they're a little different to qualify for.
Like, you have to have a certain threshold on annual income.
Right, but also like the Numerica loans, you have to live within Spokane city limits.
Okay. With down payment assistance, what's the general thresholds on annual income, the eligibility?
If the household makes less than $180,000 a year, then you can use the Home Advantage program. Or if your household makes less than $73,900 a year, then you can qualify for another program that provides up to $15,000, and it is a lower interest rate. It's what's called a preferential interest rate.
Okay, so super advantageous. Keep your monthly bill a lot lower.
Right.
If interest rates do go down, which there's talk of them coming down slightly this year and maybe substantially in 2025,
Mm-hmm.
do you think a lot of these first-time home buyers will be refinancing to get lower monthly payments?
I think that you should wait until it's beneficial for you before you refinance. I typically like 2 full points before you actually refinance. Because your refinancing is going to come with more cost. You're going to have closing costs when you refinance, and also that loan, that secondary loan, is going to be wrapped into that refinance. So it's going to increase your total principal owed.
Total amount borrowed.
Mm-hmm.
Okay, so if right now you got a down payment assistance loan that was at 6%, and say by 2025 rates have dropped to 4%, then you need to seriously consider refinancing.
Right.
The monthly payment would be a lot better.
Right.
Okay, down payment assistance, great programs, really helps people. The question's burning for me is, what is the least amount of money you've got somebody into a home?
Probably their inspection money.
Just the inspection.
Well, pretty much, because even though they paid their earnest money up front at the beginning of the transaction, a lot of times they'll get it all back at the end of the transaction. I've had clients who chose to buy down the rate and use that money so they didn't get it back, but that was their choice. But I've had a lot of clients who got their earnest money back fully at the end of the transaction. So essentially they just paid for their inspection.
Wow, that's impressive.